Hello everyone, I hope you had a great Christmas and a great New Year's. We're going to be starting off this year with a trade review. So I'm going to be reviewing a trade that I took on Euro Dollar on the Thursday of this week. So this was the 2nd of January, the first official available trading day of the year. So let's get into it. So we're going to start on dollar, and I'm going to walk through what my thoughts were on dollar when looking to take this trade. So let's start on the daily. So as you can see, since start of October, dollar has been extremely bullish. We've been running higher, and the last liquidity we took was this level here, this level of buy side liquidity. And so this candle here, this was the Thursday we were looking at. So you can see we'd already taken this buy side here, and this is a daily fair value gap. So we'd taken this level of buy side liquidity, and we'd already just sort of tipped into this daily fair value gap. So the Tuesday before, last day of the year, we'd had some bullishness, and we'd closed fairly high, but hadn't really confirmed any direction. I wasn't sure if it was going to come lower or higher. However, if we go down to the hourly and take your eyes to this fair value gap, the reason I was looking at this is because we've got 3 relative equal highs here and then another high here. And yes, these 3 didn't touch this fair value gap, but they all got fairly close to this gap, and this gap is quite clearly what held price here. So this is fairly strong resistance at this point. However, on the Tuesday, we saw displacement through this fair value gap, and on the Thursday, we opened, came lower, and this is now resistance turned into support. So this is sort of true support and resistance. If you see a fair value gap that's been holding as resistance and then you expand through it, you can expect this to be what now holds price as support. And that's exactly what we got here. So we opened up on the Thursday, we moved down to this level of support. We also got on the daily, this also acted as daily immediate rebalance into this wick. I think it got to 25%. Yeah, we got just past 25% of this wick. Didn't quite make it to consequent encroachment, but that's fine. That ticks all the boxes. So we opened, dropped lower, daily immediate rebalance plus retrading to support, and then we got expansion higher. So the next thing we're looking for is the 25% markers of this daily fair value gap. So obviously the first 25% is around here somewhere. We got straight through that, no problem. So the next target is the 50% mark. And just above that 50% mark, we have the 109 big figure level. That's what this turquoise line is. So let's go down to the 5 minute. So I typically like to look for a trade between 3 p.m. and 4 p.m. UK time, which I believe is 10 a.m. to 11 a.m. New York time. It's typically when I find price easiest to read. I find it moves cleanest during that hour. So yeah, during that hour you can see we had completed the objective by getting to consequent encroachment of this daily gap. If we look at the news for this day, you'll see we had 1:30 p.m., 2:45 p.m. dollar news, high impact at 1:30, and then the only other news we had for the day was 4 p.m. crude oil inventories. So not a lot of news for the day, especially after this high impact news at 1:30. Not really much going on. And you can also see, since coming lower and then getting that expansion higher, the only thing dollar has done all day is move higher. It hasn't once come down to pair liquidity, so it hasn't come up for buy side and then paired it with sell side. It's just been taking non-stop buy side. All of these lows are intact, not one of them's been taken. And if you've watched any of my other videos, you'll know that what I like to look for before taking a trade is I like to see it take out both sides of liquidity. So I like to see it take the buy side, then take out the sell side. Then I like to see where it wants to go next. So this was a tricky day for me because, as you can see, that simply wasn't an option. And it isn't always. Most of the time on days like this, I don't end up taking a trade. However, despite not seeing that signature, I was still able to get a good read on price. So, yeah, you have to be aware of that. If you're looking to trade the same way I do, you can't always be relying on waiting for price to take out both sides of the marketplace. Or if you're fine with trading less and missing some opportunities, then you can wait for that. But yeah, we didn't get that today, and I knew that was a possibility. Some days it just keeps pushing and it doesn't come down for the opposite liquidity. But if that's the case, I need to see that even though dollar's been pushing higher, I need to see that it still wants to keep going higher. So when we got into my hour where I like to look for a trade, I was looking at dollar and I was thinking, we haven't got much news left. We've just completed an objective. First thing is I need dollar to show me that it's still got some volume. And I need it to tell me what its next target is, and I need it to tell me if it's willing to get there in a hurry. So that basically means I need to see it do something first. I'm not going to take a trade while it's just sort of milling around at its completed premium objective. So that either could be displacement higher, which is what we got, or it could have been displacement lower, taking out some of the sell side, some of this sell side liquidity, and then seeing what it does next. But I needed to see it do something. The current position we were in was not willing to take a trade. So I had to sit through about 25 minutes of it not really doing a lot. So at this point I was more than prepared to miss taking a trade today. But then at 3:25 p.m. we got this displacement higher. Now the reason that this is important is because it displaces through, it expands through this objective. So it tells us that we're possibly looking for the next objective, and it gets through the 109 big figure level. So when you have an upside objective like these two, and price expands through them, often you can look for it to, if it comes back down, you can see whether it uses this as support or not. Similar to this hourly fair value gap. It was being used as resistance, got through it, and then it was used as support. So we're looking for a similar thing here, because something you have to be careful of on a day like this where it's just been moving higher, once you see displacement higher, there's a lot of buy stops above here because people think it's just going to keep going all the way up to the moon. So sometimes they'll give you displacement higher and then that's when they'll crash it. So you do have to be a bit careful. However, once we saw this displacement higher and this candle closed, we then had a 5-minute fair value gap. So let's mark this here. And then if we turn on the middle line, we can see the consequent encroachment of this gap lines up pretty much perfectly with this 109 big figure level. So we have two overlapping PD arrays here. So once this candle had closed, I wasn't really expecting much of this because at this point, again, I don't know if we're going to get continued volume. But now I'm starting to shape the idea of, okay, if we come back down into this fair value gap and we use the 109 big figure level and consequent encroachment of this, if we use that to get another break higher, there's a chance we could be, it could be dollar telling me that it's still shooting for its next upside objective, which is the 75% level of this daily fair value gap that we're inside of. But again, at this point, I'm not married to that idea. I'm also willing for it to overlap this fair value gap, create a balanced price range that if we then came up to and got a break lower, I'd then be bearish. And I'd be looking for it to clear up some of this sell side. But yeah, as of this candle closing, my idea was, okay, if we come back down in, I might be interested if we then get a break higher, which, as you can see, is exactly what we got. So we came back down in, we reacted perfectly off the 109 big figure level and 50% of the fair value gap, and then this candle closes above here to give us a bullish order block. Now, that's not the only thing I would look for, especially on a day like this. I typically deem days like this where it's just one-sided and we've completed upside objectives. I usually deem these as low probability days. More often than not, I'll stay out on days like this. However, if we look at the bond market, first of all, bonds haven't been doing much. They've been consolidating. However, at this time yesterday, this is where bonds were. At the same time, dollar was expanding through that 109 big figure level. So you can see we have this high here, we have a lower high and another lower high. Oh, this is on the 30 year. Then on the 10 year, we have this high, lower high, lower high. And then on the 5 year, we have this high, lower high, higher high. So we have an SMT. The 5 year took this high. 10 year didn't manage it, and the 30 year didn't manage it. So we've got an SMT on the highs on bonds. Then, after this high took some buy side, we then saw displacement lower, taking out 2 levels of sell side. It then offered relief back up into this range, and then the key here is we got this candle closing here, giving a break of structure lower. By closing below all these candles, this is now a bearish propulsion candle. That tells me, this coupled with the SMT divergence, that bonds are looking to come lower, and lower bonds means higher dollar. So this was around the 315 to 330 time. So if we go back to dollar, you see that this candle closed at 330. So at the same time this is giving expansion higher, bonds are confirming lower prices. So with that coupled with dollar's framework, we're looking good for continuation, at least to the next objective, higher on dollar. At this point, with what dollar's done and what bonds are doing, I would now class this as high probability that we're getting up to the next objective. Not confirmed, it could have closed above here and then just shat itself and come and clear up this sell side. But at this point, I'm now thinking it's high probability. So if we move over to Euro, Euro had actually been stronger on this day than Pound. Pound had dropped much more rapidly, mainly because Euro Pound had been rising all day. This was, around 330. This had been rising all day, which had made Pound Dollar much weaker. So initially, when we saw from dollar that it was moving higher, initially you would want to look for Pound Dollar to continue lower because this is the weaker pair. However, if we go back to Euro Pound and we go out to the hourly, first of all we can see the Euro Pound has been ranging. So it's important to note what the sort of recent history is. So at the moment it's just stuck in a range. And by having this bullish run here, what's that achieved? It's taken out internal range buy side liquidity. So this is a significant high here, because if we go to the hourly, so we took this low here, which, so this grey line is high time frame sell side liquidity, which was taken here, offered relief, and then was taken once more here. After this low was taken, we then came up for this high. So this is a significant high here. If we take this, that's more notable than just taking some random high like this high. This is an important high. However, Euro-Pound doesn't take this high, but it takes all the other internal range highs. So you can class that as it completing an objective. This is a whole nother deal. It's telling you much more if it takes this, so it doesn't need to do this yet. But clearing out all these internal range highs, that's completing an objective. So then when we looked at the hourly, when I looked at the hourly, I marked out consequent encroachment of the hourly wick. So even though we'd been bullish all day, I'd noticed we'd got this hourly wick. And I simply just wanted to see how price reacted at this. If we expanded through this and then got continuation, then I'd probably be looking for it to come up here. However, we moved up to this level, and then that was shortly followed by displacement lower that overlapped all of these fair value gaps in here. So now I'm looking at this fair value gap, and I'm thinking if we come up into this and continue lower, I'm at the very least thinking that we're going to come for this low, but I'm at least bearish on this. So when dollar confirmed bullishness, it's not a guarantee that because pound has been heavier all day, it's going to continue coming lower. So the next thing I saw was this expansion lower on euro. So this is at 325. This is this expansion that was on dollar. And then on pound it was here. So the most important thing about this is that, so remember when dollar filled it, it only filled half of it. When euro filled it, it also only filled half. So it's leaving half open. When pound filled it, pound filled all of it. Now, when you are wanting to see bearishness and you get a bearish fair value gap, it's not an absolute rule. It's still fine for it to completely fill it. But generally, it's better if it leaves some of it open, because that's price telling you it's in a rush to move lower. It doesn't have time to come all the way up and fill it. It's only going to fill half of it, and then it's going to keep going. That's how you should interpret that. So when we look at what euro pound was doing, so at 325, it's expanded away from a premium objective after it's completed a premium objective. And then we get euro leaving some of its gap open when pound has closed its gap. At this point, even though all day euro has been stronger than pound, at this point, when we're looking for the creation of a bearish order block, at this point euro is my chosen pair. It's a more ideal pair to take a trade on, to expect bearish price action rather than pound, even though all day pound's been the weaker pair. So those were my thoughts when I was looking at this and this candle was still forming. Yeah, I was looking for euro to be the sort of new weaker pair. Now, it only just closed below that, but you can see dollar, actually let me go there, dollar closed decently higher than that, but euro only just closed below that, which is fine. Yeah, I would have preferred it to be a bit more confident and close a bit more convincingly lower than that, but yeah, that was enough. So then we go down to the 1 minute. Go down to the 1 minute. This candle here was the 5 minute closure. So you can see it just got below there. Make this a bit brighter. Just got below price there. Did have to suffer through a bit of heat on the entry. It came up for 5-minute immediate rebalance, which is absolutely fine. It's the same as what dollar did. Next candle was immediate rebalance. That's fine. My stop loss was... I wanted to have my stop loss above this high and above consequent encroachment of the fair value gap, but because this was my target, that's less than a 1-to-1, and I only target between a 1-to-1 and a 2-to-1, so that wouldn't have worked for me. So I needed to have a bit of a tighter stop, so I brought it down to above the body of the order block, and I wanted to have it above 25% of the fair value gap. So I had it, I think it was a 10.4 pip stop loss, which now made this a 1.2-to-1. So that's a bit better. And yep, despite having some drawdown, we were safe. It looked like price had come up. I was hoping that the bodies would hold inside this fair value gap, but they didn't. They came above that, but it looked like they were just coming for this order block here. I was thinking maybe it will come up for this gap as well, which I think my stop loss was covering that. Yeah, I think my stop loss was about here. Yeah, so my stop loss was here, so it was just covering this as well, which obviously was hoping this would stay open, and it did. So we got a bit of drawdown, 5-minute immediate rebalance, expansion lower, institutional order flow entry drill, just about tipped it, consolidated for a little bit, and then we ran lower. The reason I took a partial here was because, being that it's the 2nd of January, price is still a bit sort of choppy and a bit sticky. It doesn't do exactly what it should be doing, which is what I'd seen from this. There had been some moments where I wasn't really liking what I was seeing. So once we got this expansion lower and I moved my stop loss to break even, I at least wanted to get some sort of payment for the trade. So I closed half of it here, and I let the rest run for my target, which was here, but because this was such vigorous expansion, it pushed the take profit to a bit lower than that, so we got a little bit more. I think it was 5,000, yeah, just under $5,300 profit, which is perfectly fine. A little bit less than a 1.2 risk to reward, but that's fine. So just to show you what my target was, it was the high of this balance price range. So we'd taken this level of sell side liquidity, we'd taken it here, so then the very next level to target was this level here, and that's where my profit was. I was not expecting this to happen, especially on dollar. Remember, we were looking for this level here, and it got right through that and went all the way up to the closure of the daily fair value gap, so was not expecting that. But yeah, it meant we got our profit. So there we go. Hope you enjoyed. Hope you felt like you learned something. And I will see you possibly next week, maybe a little bit longer. Goodbye.